Hi, I'm Reshma Kapadia with SmartMoney TV. Today I'm joined by Charles de Vaulx, Portfolio Manager at International Value Advisors, which just launched 2 new funds. Thank you for joining us, Charles.
You're welcome.
So earlier when we spoke in this fall, you were heavily defensive with a lot of money in cash. Can you tell me a little bit about where you stand now and what you've done with that cash?
Yes, indeed, Reshna. Early October, we were puzzled by the fact that on one hand, foreign markets, non-US markets had come down a lot, yet the US market had not come down as much. And so that made us nervous, the possibility that should the US market fall another 20%, it would be probably delusional to believe that our foreign stocks, however cheap they had become by then, would not fall. And then in the second week of October, not only the foreign markets, but the US market fell sharply. I think in the second week of October, the US market fell 20%. And so we pounced to a large extent. We had, again, 40% in cash early October. And by the end of the second week of October, we were down to 15% in cash in our global strategy.
And anything in the US? Did you move?
We also, besides bonds, we've added quite a bit in Japan. Now, until now, in Japan, we had mostly smaller domestic-type businesses which we thought would not be hurt should the yen strengthen. And indeed, a few weeks ago, the yen strengthened significantly, not only against the US dollar, but against the euro. And so some of those export-oriented companies that your readers or listeners may be familiar with, Makita, Canon, Fanuc, those stocks took major beatings, and so we started investing in those names.
And so there's all this talk about the economic recession spreading abroad and Japan not being immune from that and the bank actually needing more capital, a large Japanese bank. Does that worry you at all, or what are your thoughts on that?
No, it does not surprise us. I think we were adamant for many years that the world was not ready yet for decoupling. Maybe it will happen in 40 years from now when the Chinese and Indian economy will be even larger than they are today. We've always believed that when the US economy would sneeze, the rest of the world would catch a cold. So you're right. I mean, there is probably already a recession in Japan. Japan does derive a lot from exports. But what's extraordinary in Japan, Reshna, is that country has not gone through a credit bubble over the past 19 years like we have had a bubble here in the US or in England or Australia. Also, as value investors, of course, what's key is valuation. And valuation are extraordinary in Japan. The market as a whole trades way below book value. The balance sheets are strong, obscenely strong. Many of the companies we have, stocks we have bought in Japan, the net cash alone represents 50, 60, sometimes 150% of the market cap. 150% meaning that we pay less than zero for the business.
When was the last time you saw valuations like this in Japan, for example? I mean, have you ever seen it?
The kinds of valuations we see in Japan, we saw them last in South Korea in 97, 98. There was a major Asian crisis. South Korean companies got hurt tremendously. Now, most Korean companies at the time had ugly balance sheets, but there were a few gems. There were a few companies in South Korea that had behaved, that had strong balance sheets, and were able to spot those companies. And so the valuations we see in Japan are reminding us of what we saw in Korea then.